Welcome back. As promised, let's talk commodities. Manisha is now joining in. Manisha, what are you looking at today?
Well, I'm looking at silver, absolutely, because this is an important week when it comes to silver, and you have various headlines coming in for silver as well. So in the international markets, we've made an all-time high, and this time around at 51.30. The last time we went closer to 50 was in 1980, then 2011. But this time around, there are a lot of factors in play which seem to be supporting the prices there. Having said that, if you look at the last 1 month, we've gained up by 19% for the silver prices. And in this year until now, we are up by 72%. This is the best yearly gain that you've seen in many, many years coming for silver there. If you look at the Indian prices, then MCX has seen high above 150,000. In the spot markets, adding to the premium because the physical silver has been in shortage. There have been talks about delayed delivery. So, and add the GST to that as well. So the spot prices saw an all-time high of 163,000 there, or 1,63,000 rupees a kg. Now talk about silver ETFs, and in last 24 hours, all we've been talking about is silver ETFs. Here you have ETFs from Nippon, HDFC, Kotak, UTI, Tata, etc. And when you look at the high NAV, that all-time high NAV that silver has hit on ETFs has been at 165. So it has been a huge premium that silver ETFs have been commanding over spot, over MCX as well. Why is this happening? Because there's a complete disconnect at this point in time from the physical market. The silver ETFs have worked anywhere between 2 to 10%, as we've seen in the trade yesterday. Also, investors are paying higher than the actual price, and is the reason we have had Kotak come out and say that this is not what we want it to be, and they have pulled back from a lump sum amount that you have to pay onto that. Strong investment demand, expectation that the silver prices will go much higher from here are some of the factors that we've seen play on the markets there. Physical shortages is one part of it. And remember, when you are investing in an ETF, every unit of silver ETF has to be backed by actual silver, and that is shortage in the markets there, and that's the reason you're looking at a huge premium continuing into the markets. But if you are buying physical and ETFs at this point in time, remember that you're paying a premium which isn't aligned to the international markets, and so going forward, as and when these markets align, you have paid a higher premium there to buy these markets. Anyways, as I said, Kotak Mutual Fund is temporarily suspended lump sum or switch in subscriptions effective 10th of October until as and when they come out with the next notification there. So this does tell you that there is an issue when it comes to physical silver availability, and that seems to be disrupting markets across there. Silver prices have been gaining in the last 3 or 4 years, and we know that there is a deficit in the international markets. The buying has been strong. Investment, Indian buying at 5,000 to 6,000 tons a year also has been on a stronger side there. And there is shortage of freely available silver in the London market as well. This is where the prices are fixed, and this is where the international markets take cues in from as well. This is a 5th year of deficit. Markets are looking at very strong sentiment. There is this conversation about further US Fed rate cuts as well, lower real interest rates, and that seems to be supporting tangible commodities, is the reason you have seen gold, silver, for that matter, even Bitcoin do very, very well in the markets there. I want to talk about on the overall global silver availability, and as per the Silver Institute, you could be looking at a deficit of around 100 million ounces. That clearly has been supportive. Take a look at the Indian markets now in sense of prices, and this is a 5-year jump in card where you can see in 2016 we were trading at around 39,000. 2020, we were trading at 67,000 rupees a kg, and fast forward to 2025. So in 5 years, we've more than doubled when you look at silver prices. When you look at the prices in 2025 for the international markets, we started this year with $29.5 an ounce, and every few months, we've seen prices continue to gain up. 72% up from where we started. 51.3 is what we've done. And when you look at the global banks and brokerages, they are still talking about higher silver prices going forward from here. This is an interesting data. When you look at the cost of production for silver, it's anywhere between $8 to $26 an ounce. Remember, silver is a byproduct when you're taking out zinc and lead, etc. So then the cost isn't so much. So $8 to $10 to $12 when you're taking out silver. But $28, $26 is when you're taking out from a silver mine as well. So at $51 an ounce, you stand in very strong profits if you were a miner there. This is what we've done in last many years when it comes to silver price gains. So it has been a constant gain, but 72% is the best in last 15 years now. Going forward, Nomura says that the global markets will see a deficit of 142 million ounces, and they expect prices to make an average of $50 an ounce on the 4th quarter. Julius Baer, of course, is slightly more bullish. 52 to 58 is what they expect. Once 50 is done, they expect the prices to continue to gain up.
Okay, all right. Thanks very much, Manisha, for that exhaustive explanation. What's happening with precious metal silver in focus there.